Most property investors always wonder whether they should be paying tax even though they are not making a profit in their rental properties. My name is Shilboy. I'm your tax and financial advisor. I talk everything that has to do with tax, financial planning, and property. It's a common question that most property investors, they'll ask a simple question to say, Shilboy, I'm actually generating rental income. However, I'm left with negative cash flow, meaning that all my expenses, including the bond repayment, it's actually at the negative position. So, should I be disclosing such to SARS? Yes, you should be registering with SARS as long as you're generating any income, right? However, one thing people don't realize is how SARS calculate what you call taxable income or assessed losses. So, most people consider when they're calculating their cash flow positive or negative, they consider those capital repayment that you could be paying to SARS, or for that matter, even some of capital expenditure, such as improvement that could be done in a property. People then assume that by virtue of them having spent money on capital expenditure, it means that those expenses will automatically be deducted at 100% on the day or on a year that they have actually expensed, or rather they spend money on those capital expenditures. What we don't know is that SARS doesn't actually consider those. So if, for example, you have spent money in developing additional rooms in that particular year, you may think that those costs that we incurred, or rather those expenses that you spend on developing those additional properties, will be considered when you calculate your taxable income, therefore meaning that you'll be at the loss position and you shouldn't be paying tax. However, that's not how SARS see things. If you spend money on improving your property, and let's say you put a new roof on your existing property, or for that matter, you put 2 more rooms, such costs will be added to what you call base cost, and therefore will not be deductible in your tax year, in a year of your assessment, meaning that you could find yourself actually having made profit. But when you calculate, you're thinking that actually I've spent so much money on expenses according to your definition, therefore I shouldn't be paying SARS. So that's why it's so important to actually educate yourself to understand how SARS actually calculate what you call taxable income, so that you don't get overwhelmed when is the, or for that matter, you are able to plan ahead to know that actually at the end of the year of assessment, I'm going to potentially be owing SARS because I would have made what you call taxable income, therefore being subjected to tax. So this is a common confusion, and I know for a fact that some people would be saying, listen, I've got an apartment and actually I'm still paying bond, but why should I be paying SARS, or why should I be registering with SARS? You should still be disclosing those activities to SARS on a yearly basis. For that matter, you could find yourself on that bond repayment. What people don't realize is that at the particular point in time, the bond repayment is comprises of interest expense and capital portion. So if you are at that position where you are actually also paying capital back, that capital amount is not going to be considered when we calculate either you made taxable income or assessed loss. Therefore, you may actually be factoring in when you're calculating whether you made profit or loss, but SARS doesn't consider the capital portion that you are paying back to the bank. So that's why it's so important to differentiate such, so that you don't make any form of confusion. If you're still confused and you don't know what I'm talking about, I'm more than happy to sit with you and we can go through your details. My details are on my profile. You can email me, you can WhatsApp me, and I'll take you through what do I mean by that. Maybe with your numbers, it could make sense. Okay? Good luck.